Yes, welcome back. We're going to wait a few minutes until we see how many will join. Yes, so I think that we can start. So I put four things on my list here. We're going to talk about the MACD first. So we're going to have for every live session an introduction to one of the indicators that we're technically using. So the indicators that I am using are, you can see them on the screen at the moment. I have the Bollinger Bands here, I have the stochastic here, CCI, RSI, and the MACD, and then we also have the moving averages. Those are basically the indicators that I use. Then I also use Fibonacci retracements and Fibonacci forecasting, which I will add to in another day. But next time it's going to be RSI, then we're going to talk about the CCI, stochastic, and then I'll add more and more indicators, also indicators that I don't use, but I do add it as basically a part of a introduction and also a course. Some people will think they are helpful. Some people will think they are not helpful, but my experience is that you should use the indicators that work for you and not to have too many of them. If you have too many, you can basically just get, it just is an extraction basically. I think the amount of indicators I'm using at the moment, I think works really well. They are very helpful, all of them, and also in different kinds of trading, for example, indices and Forex, and also commodities, especially the CCI, for example. It was originally made as a commodity tool just to analyze commodities and precious metals, and not to analyze Forex and stocks and so on. But it is very useful for that as well. So right here we have the MACD, and as you can see, we can just take the scale here. We have 0 right here in the middle. At the moment, we are looking at we can go to the Great British Pound, the US dollar. No, that's not a very good one. This one is better. So right here in the middle, we have 0. And if these lines are above 0, then technically we are in an uptrend. If they are underneath 0, then we're technically in a downtrend. So we're looking at the moment at the US dollar, Canadian dollar, and as you can see, we have been a long downtrend until we got to this period here where we broke out of this downtrend. And you can also see that these two lines are underneath zero this entire period until now, where we have basically gone past the line. And this is actually an indication that we may see a trend reversal in this currency pair. Maybe in the short run. We have actually tried this before. If we go all the way back here, we did also cross zero, indicating that the trend may change, but then we went back down. So we have these bullish runs which go over zero. They are an indication that it's going to become bullish, but it doesn't always mean that we're going to have a trend reversal from a downtrend to a long-term uptrend. It could also just be a minor thing. So we have two lines here. We have the signal line, and then we have the MACD moving average line here. At one is a line of 9 exponential moving average. The other one is as a line of 26 moving averages, and they are different. And that's the reason why you can basically see when they're crossing each other. It's because they measure at different speeds. Then we also have the histogram here, and the histogram shows us the difference between these two lines. So the MACD line and the signal line, when these cross, that is an indication that you're going to go from a bullish run to a bearish run, or from a bearish run to a bullish run. So every time they cross, for example, we have a crossing right over here. We are underneath, the MACD line is underneath the signal line. And when it crosses here, this is actually a bullish crossing. So we're going from being underneath to go above. And that basically means that we are going to go into a bullish run. So you can see this move here. That is basically what the MACD is showing, that we are crossing the line here, and right here we can also see that candlestick there is causing this bullish run. So it's a really, really helpful indicator, and probably the most used indicator of them all for determining when you have a trend reversal from a bearish run to a bullish run, and vice versa. So the difference between these two lines, the signal line and the MACD line, is basically cast by this histogram here. So the bigger the histogram, or the histogram is, the more the momentum is. So the closer that you get to zero, that basically means the momentum is going to change from being bullish to bearish, or from bearish to bullish. So for example, here we have a very bearish period where the MACD is underneath the signal line until we get to this period and it becomes zero. Then you go from a bearish period to a bullish period. So it changes from red to blue in this case, and you can determine whatever color you use for this. So when you're trending above zero, that basically means that you're in a bullish trend. But you can also have periods where you decline in the bullish trend. So prices will always go up and down all the time. Even in a downtrend, you will also have periods where you rally. For example, here, you see one here, and probably this is also just a minor rally until we go back down towards this resistance line. So even though you are in a downtrend, you will constantly have rallies. And those rallies are where you basically earn money. So to catch those rallies there, to basically sell at that period and then target these lows, that is actually where you are. That's the trading strategy that we use, and that's where we basically earn money. So in a downtrend, I never ever buy in a downtrend. I short in a downtrend. So I just wait until we get as close to the major resistance as possible, and then just short. So I would enter the market there, I would enter the market there, I would enter the market there, and so on and so on. At the moment, don't really know where major resistance is, so that's the reason why I'm not trading any of these foreign exchange at the moment. 100 moving average could be the next resistant, but we technically don't know at this current stage. We need more price action in order to determine when we are going to run into resistance. So underneath 0, for example, here, that is a period of a downtrend. Above 0 is a period of an uptrend. Crossing the signal line from being underneath to above is a bullish sign. Crossing the signal line from being above to going underneath, that is a bearish sign. So that is technically what you use the MACD for in order to determine when you go from bullish to bearish, where you are in a uptrend or a downtrend, and what's the difference between the signal line and the MACD line. You could basically say that these pillars here are also momentum. It's basically the bigger the pillar is, the higher the momentum is to the upside. The lower the pillar is, or the smaller the pillar is, the lower it basically cools off until it basically goes and changes direction. Yes, so what I do basically every single day is that I look at the news. I look at the calendar every single day. I don't use a lot of time basically on the news, but I do look at it in order to determine what basically is happening. Because some kind of news is really helpful. Too much news is just hopeless. So you shouldn't pay attention to every single news there is in the marketplace, but certain kinds of news, for example, in the economic calendar, is extremely helpful in order to determine, for example, in the foreign exchange market or in the indices where we're technically are going. So I don't know if you have been looking at here. Sorry. Yes, there. So I use investing.com every single day, and I go and look at the calendar. So if you go to investing.com, you will basically see here looking at, I don't know if people are using this, but this is what I'm using. So the tools that's up here, you have an economic calendar, holiday calendar, earnings calendar, dividend calendar. Actually, these 4 calendars are extremely helpful. Dividends, yes, you can look at them and so on. And also when you do investing, whether or not you want to invest in a dividend stock or something like that, then it's helpful to determine when you basically receive your dividends. Earnings, extremely important for, especially for stocks and indices. And holidays, no, not really. But economic calendar, that is what I look at every single day. So this is what the economic calendar looks like. It is basically all the data, most important data that is available in the world. So I don't just look at the European market, I look at all of the markets. And I don't look at the ones with 2 stars or 1 star, I just look at the ones with 3 stars. So for example, today, there's a lot of manufacturing PMI data out there. We have one for example, from India, that is actually green. And for those people that never have used this before, so the previous number here is basically the previous number last week or last time the PMI was released. The forecast is what is expected, and based on that forecast, if the actual number that is released is better or worse, that is actually what is moving the market. So the PMI in India doesn't have that much effect. But if you go down here, we see the PMI for Germany. And this has quite a big impact on the euro. It also has that impact on the DAX. And as you can see, the PMI for Germany was expected to be 57. It was 57.1. And just that it is a little bit higher than expected, it becomes greener. It has already a major effect on, for example, the DAX and also on the euro. If a better number, it will be very bullish for a euro and so on. So we also have the PMI for example, for Britain. It is actually really good, and that's why the British pound rallied early in the session. Even though the US dollar has been appreciating fairly much today, it has not affected the euro and the Great British pound that much, and that is mainly due to the PMI that has been released. So later on, we'll see the PMI for the United States. So it is expected to be 60. If it's over that, then it is very bullish for the US dollar. If it's under that, and then it's very bearish for the US dollar. So you could see the US dollar tumble if this number here is much lower than the actual number. Other than that, we have the interest rates in Australia, and this will of course affect significantly the Aussie dollar and also the Aussie dollar US pair. However, it's not going to change. So they're not going to change their interest rate at this point whatsoever. So let's go back to this. So we can go and look at the foreign exchange market. I have not added a video of foreign exchange market recently. I did a small one in, for example, the last video, but other than that, not in TC2000. So I have not made a buy or a sell in the foreign exchange market. And the main reason for that is because of the US dollar. It has been appreciating significantly the last few days and or last few weeks, I should say, and that has major implications for everything here. You can just look at not that was supposed to look at. It was here. It's South African rand. What am I doing here? Here, Turkish lira. So the US dollar, Turkish lira, how big of an effect that has had on, for example, this currency pair. And you just look at all of them, how much effect it has for the last few days. Aussie dollar as well, it has been basically falling apart. You can look at the US dollar yen, it has also been rallying significantly due to the same fact that the US dollar has been appreciating. So if we take the US dollar yen, we have been in this really nice channel for a very long time, and now we just broke out of the channel. And at this point, it is impossible to say where we are going. We have tested the 100 moving average, the 150 moving average, and now we're going to test the 200 moving average. So I do expect this to pull back at least from the 200 moving average towards the 20 exponential, and that will technically determine whether or not we are going to see a trend change here. If we bounce off the 20 exponential moving average or the 100 moving average and so on, that basically means that we are going to trend upwards. We are not going to go back towards this channel. We are going to go like this all the way up towards the 300 moving average, and we'll see the crossing of all these moving averages, and then we'll basically go even higher. But that also means that the US dollar will start appreciating significantly in the next coming days. And yes, so another interesting thing, and that is basically silver. So silver has basically taken off. We are trading at $29 for silver at this point. And yes, it has actually exploded to the upside. So the explanation for this is Reddit again, or that is basically what the news says. It is very unlikely for silver to rally before gold. Usually it is gold that leads the way, and we can see the gold market, it technically hasn't moved. And you can see silver, it has just exploded to the upside. So news has it, or rumor has it, that the guys from Reddit are no longer buying stocks in GameStop and so on. They are actually going to precious metals and commodities and trying to jack up the price there. So I don't know if this is just based on rumor, because at the moment it has turned into pure speculation. People will just say, oh, they're focused on this, and then everybody will start buying that. And yes, the parabolical moves like this, they never ever last. We can see that RSI, for example, is it at 85. The Bollinger Band is way outside here, so this is just a disaster waiting to happen. We could expect a pullback here towards 20 exponential. That's roughly a drop of around 10.8%. That is what we're looking at this current stage. So we are testing these previous highs here. We have actually gone way past them, and we are testing these very highs here. Did pierce it, and it'll be interesting to see. I am bullish on silver in the long run. However, I did not expect a parabolical move like this, and I'm afraid it is probably just speculation that everybody is just flooding, putting money into silver because the guys on Reddit are trying to buy silver. So we can go and look at the stocks that I bought on Friday, because the market is doing really well at this current stage, and so we can go back on to investing, and then we can see what is actually happening there. So you can see that the indices, they are mostly of them all up. The Dow Jones is up nearly 1%. The S&P is up over 1%, and so is the Nasdaq. US dollar is up 0.30%, and of course, usually the futures and also the US dollar index do not follow each other. Usually it's the opposite of each other. But yes, it is not 100% correlation, but usually that is the case. So we made an investment in, for example, in Walmart, and hacking. Walmart is up 0.36% today in pre-market. We can see that, for example, AMD is up 1.47% today in pre-market. And we can also look at my long-term investment. For example, I made one in Neon. That is doing really well this morning. And the same goes for Tesla. Tesla is also doing really well this morning. So both Neon and Tesla are just in the same trend. They have massive moves to the upside and they have massive moves to the downside. But still, the trend is positive, and that in the long run should be a very, very good investment. Should be a very, very good investment. The last one I'm going to look at is basically Apple. So Apple is also up 1.61%. It was up nearly 3% earlier when I looked at it. But Apple and most of the tech stocks had very, very good earnings last week. And yes, they will probably see that come into effect now. Apple released its best earnings ever. The same goes for Microsoft, and so on and so on. So other stocks that we can look at, I've done the scan here for the S&P 500. And as you can see, we have roughly 53 stocks that are in this category, where I scan whether or not they are oversold or overbought. So I'm scanning at the moment for oversold. And the main reason why I scan for oversold is because, well, the market has been falling off a cliff the last 3 trading days, and it is very likely that most of the companies are significantly oversold. At the moment here, 1/10 of the companies in the S&P 500 are either oversold or overstretched at this moment. So when I say that, I look at the Bollinger Band here, that the stocks that are trading way outside of the Bollinger Band, and when the RSI is significantly lower than 30 here in the RSI. So both here, this stock is underneath the Bollinger Band and is also underneath here in the RSI. So we can, this is not pre-market data, so you can go on investing and look at what it is basically on pre-market. So this is APH. So if we were to invest in that on Friday, we should be up roughly 0.84%. So the idea to scan for stocks that are overstretched and oversold and to buy them late in the session is that you basically can catch the gains on the next day. It is almost roughly 70-80% of those stocks that are oversold, significantly oversold or overstretched, that will rally the other day, and you can basically catch that rally the next day. So especially stocks, for example, Tesla and Neon, when they get oversold, that is just when you should buy as much of it as possible, because people will just flock and buy as much as those stocks as possible. So if we look at the other stocks here, if we look at this stock, so this is not the best stock, even though we have these two conditions, both the underneath the Bollinger Band and also low on the RSI. And the reason for that is that we could actually fall all the way down to the 100 moving average here. So we probably could fall additional, how much is this? 2.44%. So you can see this this candlestick here went all the way down to the 100, and then we rallied, and now we're going back down. So this would not be a stock that I would consider buying into, even though these two conditions are looking very good. So we can look at this one. This is not. This has also been. This is ITW, and the RSI here is at 20. It's significantly oversold, and the Bollinger Band here is underneath the Bollinger Band. The price is underneath the Bollinger Band. However, we are hovering just above the 200 moving average. I would still consider this too risky, because it could actually fall towards the 200 moving average before going back up. So I would actually wait with this stock in order to buy it. So next one here, this one is much better. And the reason for that is because we went all the way down to the 300 moving average. So we are very low in the RSI. We're not oversold. We are significantly outside here in the Bollinger Band, and therefore it is very likely that we will pull back towards the middle of the Bollinger Band. Other technical indicators are also looking, well, fairly bearish at this point, but the 300 moving average is significant support, and therefore it should not go much higher than this. So next one here is WRB, and as you can see, this one is also really good. This could actually be a stock that I could invest in. So we are just above the 200 moving average. We have tested it once before here, rallied, are almost testing it again here. The RSI is nearly on the edge of being oversold, and we are significantly overstretched here in the Bollinger Band. So we could look also at the pre-market, what basically it looks like. So the WRB, so no, there's no data on that at the moment. So let's just go on to the next one. So this one is not good. This one is looking very good. So this is HSW. So the reason for this is that we're on the edge of being oversold. We are crossing the signal line here, and we are just at the 150 moving average. And usually the 100, the 150, 200, 250, and 300, all of those major long moving averages are usually very, very supportive or resistant when you get close to them. So expect a rally from here, and if you buy into this, put a stop loss right underneath the the 150 moving average here, and then target these previous highs. So this is a stock that you probably hold for several weeks. It's not going to be a stock that you all of a sudden is going to rally up towards the 150. Depends on the guys on Reddit are going to buy this or not, probably, but that is not the case at this point. But it should be at least a rally up towards the 50 moving average, which is here at $150 per share. So we could look at also the major tech stocks, which are not there. We are here. So most of the stocks, the tech stocks, fell significantly on Friday and also on Wednesday. So they rallied quite a bit on Thursday and then fell on Wednesday and on Friday. And it is very likely that we are going to see a rally today. So kind of depends on the news, and it also depends on the US dollar index. So we'll see. US dollar is working against our stocks and indices at this moment. They are holding. You can see in the pre-market and also in the futures market that they are still rallying. So it's going to be interesting. We could also stay in this situation for the next few days and then it will start rallying. But I'd be fairly surprised if the indices and other stocks will break down in today and also in the next coming days. So if we look at Apple, for example, we fell all the way down to the 40 exponential moving average. And in the pre-market, it looks like we are rallying at least 2 or 3%. And we are up roughly above the 20 exponential moving average. So it looks like Apple has found major support here at the 40 exponential. And now it's heading back towards the $145 a share. So you can see that this is a move of roughly 11%. So a major move for Apple if we go back to that level. I do expect Apple to, within the next month or two, to rally all the way up to 150. So Apple is in one of my portfolios for my long-term investment, and it is a stock that is going to grow and grow, and it's also a very good dividend stock. Next, we have Amazon. Amazon also fell significantly towards the 50 moving average and has found support here at the 50 moving average. We can also see here in the Bollinger Band, we are right in the middle of the Bollinger Band and are pulling back. Other technical indicators are looking fairly bearish for Amazon. However, I don't think that we're going to go lower than this. So 150 is right underneath here as well. There's a massive amount of support right underneath here. So if we go lower, I would certainly start buying into this, because if we go all the way down to the 50, then we can target these previous highs here, and that's a move of roughly 6.23%. Facebook fell off a cliff. We waited for a really long time in order to get this rally. We sold it when we were at the 50 moving average, roughly here. It continued the rally around 4.5%, but you can never ever get the perfect sell or perfect buy. You have to just look at when you're satisfied with your trade and then just close your trade. But it did rally another 4.5%, and since then it has just fallen off a cliff. We're down roughly 10.7%, and we're heading back towards that 200 moving average. So it'll be really interesting to see what basically happens here. I would not be surprised if we fell all the way down to the bottom of the Bollinger Band, and that is way below the 200 moving average. So we can see over here that we are underneath the middle of the Bollinger Band. We could actually fall to the bottom and then rally after that. So that is basically a break of the 200 moving average. Next is Tesla. Tesla is at the moment is never cheap, but considering that it just continues to trend upwards, every single pullback similar to this is basically a buying opportunity for Tesla. Technical indicators are looking dreadful, but we are really low in the RSI. So RSI is at 35 for Tesla, and we have actually been that low in the RSI for, I don't know, a very, very, very long time. So you're going to see in the pre-market that people are buying into this stock. It will most likely target 900 next. That is a move of roughly 12%, give or take. And then we're going to head towards 1,000. And that is another 26% in a rally. After that, we're going to see a major pullback when we get to that point. So next on the tech stocks is basically Google. We can see that we have some room to the downside. I'm pretty sure that Google will head towards the 50 moving average before we continue this rally. The 40 and the 50 you can see here has been major support in the past, and therefore when we turn around here, then it's time to basically buy this. So targets are these previous highs, and that's a move of roughly 8.7% to the upside. There's no reason to expect Google to break down from here. If we do, then the 100 moving average will be an enormous buying opportunity. Last but not least, it is Netflix, and as you can see, we had this enormous gap up due to their earnings release, and since then we just fallen back down. So I was actually on the brink of buying it here, but I held back. I should have actually done that. It was a rally of roughly 18%. And since then, we have fallen where we are at the moment. From there, we have fallen roughly 10.26%. So what happened here in Netflix is that we got way outside here with the Bollinger Band. We got significantly overstretched, and usually when that happens, you just go slowly or collapse completely towards the middle of the Bollinger Band. That is usually what happens in this market. So, do you have any questions? Nope. So we can go and look at the indices on the futures, and we have it. I can put it up here. Yes, so we have it right here. So we go and look at the NASDAQ. So as you can see, last night I got quite nervous because I put a stop loss at roughly 12,700, and we got down to 12,740, I think it was, and then it just exploded to the upside. This was probably as far as the NASDAQ went, and I am still hesitating in order to enter more buying opportunity here in the NASDAQ. I would prefer if it breaks the 20 exponential moving average and starts trending up this way. So what I think is going to happen here is that we're going to head towards 14,000. That is basically where I think we are. So we had this pullback here, and the reason for that pullback is because we have been rallying significantly since the beginning of November. So this is the US elections. Biden won. Then we had a massive pullback towards the 50 moving average. And since then, we just rallied and we got very, very overstretched here in this market. So when this happens, when we get outside of the Bollinger Band, we're just going to see a pullback at least towards the 50 moving average. At least the 50 moving average. And that's what we have witnessed right here. So next target is most likely 14,000. It is looking really nice today. Another candlestick right above here that opens the door to 14,000. If you look at the SPX, which is the same as the S&P 500, you can see that we went even further in the S&P 500, way underneath, and then we started rallying. And now it's looking really, really good for the S&P 500. If you manage to break above the 20 exponential, then we're heading all the way up towards 44,000. That is where we are going. So the Dow Jones, it got hammered on Friday. We are starting to rally. It is not looking as good as the other indices because we're trading underneath the 50 moving average and the 20 exponential moving average. However, these technical indicators are turning around. So if we cross the 50 and the 20, then that opens the door to these previous highs at 41.250, and we are probably going to 31,500 or 42,000. So if we look at the German DAX, we can see that we also hit the bottom here at 13,350, and now we're trading above the 50 moving average. So also indicators here are looking very promising. If we manage to cross the 20 exponential, that opens the door to 14,000 and beyond that. So to catch these moves to the downside, that is where you actually earn most money. So, any questions? Any stocks or commodities or anything that I should... Okay. For a buy or a sell? I can take both. So if you are buying this, probably good idea to take your money right now. Main reason, it is very, very overexposed. So we are significantly outside here in the Bollinger Band, and if you look at the RSI, it is at 79 at this current stage. And yes, you could expect a pullback at least towards the middle of the Bollinger Band. So from we were at the moment towards the middle of the Bollinger Band, that's a drop of roughly 36%. So it most likely won't do that, but you could see something similar to this. So these kind of parabolical moves to the upside usually don't last. They can, but usually don't last for a very long time. You could also look at the Fibonacci retracement for this. You can take it there to these highs, and you can see that the first Fibonacci retracement here at 23, that is at roughly 11.60. Then we have the 38, which is at 10, and that is most likely where we're going to head to. So if nothing really changes here, then a pullback towards this first Fibonacci or the second Fibonacci retracement here at 10.55, that should be that should probably be where it will drop to and then continue. If that breaks, then we're going down towards the 50, and the 50 is at 9.38. But usually in a drop like this, 10 is a very round number, and people will basically focus on that and then buy into it. That also happens in some cases. But this is uptrend, and I don't know if you're buying it or selling it, but I would not sell it. I would actually wait until it basically drops to support in order to buy into this. At the moment, if you are considering buying it, then it's very, very overstretched. Yeah, I kind of have it. I don't sell an uptrend. It's just too risky. It's you're getting into the realm of gambling if you do that instead of basically trading. You should just wait until it pulls back, find support, and then buy the rally. It is much, much safer to do that. Any other? The thing is, when you sell uptrend, yes, there is of course opportunity. You can be lucky and get that sell correct, but it's just the probability of being right when buying an uptrend is just much, much bigger. That's the whole idea. The vice versa for example, if you're in a downtrend, to buy in a downtrend, you will be it's more likely that you will be wrong than right. So it is always a better idea to just follow the trend. Believe me, I did that also when I started trading, and it does not work. You can get it right sometimes, but most of the time you just get it wrong. Yes, if there are not any more questions, I think I'm gonna leave it at this. I'm going to try to have something new on Wednesday if it works. That is basically do it more on more live trading actually, which is more public. So probably get more discussions from all the people that basically are on YouTube, and you can look at different opinions and so on. So that will be just before US market opens on Wednesday. So otherwise, it should be a really good day in the markets today because everything is just rallying still, even in pre-market. And yes, so good luck and thank you very much.